Good morning, Helen, or good afternoon, or whatever time it is that you're watching this video. Terry Dyer here, and just getting back to you about rates and home loans and stuff like that. Let me look up. Let me look at my website. Here's my website, and here I am. So you know who you're talking to. There's Debbie Nelson. She's my partner. She owns Hanson Loans, and she and I have worked together for 20 years. I'm an associate broker with Hanson Loans, and to tell you the truth, Realty San Diego is also a mortgage company. So, it's not about Wells Fargo or Quicken Loans or Hanson Loans or Realty San Diego. It's about the person that you're working with. It's about them and how much they know about what it is that you want to have them accomplish and how well they're able to do it. We find that true wherever we go, right? It's always about the person that we're working with. It's not about Discount Tire or whatever the name of the company is. So anyway, Debbie's an amazing loan officer, and I like to think that I'm pretty good at what I do also. So let's go ahead and, we've been doing it for 20 years. Hopefully we got something right. So let's go over and take a look at some numbers, okay? Now, this is what I was sent from, excuse me, Helen and Simon. You guys may be both watching this. This is what I was sent from Lending Tree. And it's just really very little information. Your name, number, your address, that type of stuff. And I looked that up. Like I said, I think I told you an email or something. I think that was, 2,700 square feet in this house. And I think you're renting it for about $5,000. Because I looked it up, wanted to see a little bit about your lifestyle, so I'd be better able to help you, right? So the more I know about you, the better able I am to help you get what you want to have done. So moving on to that, what I've created here is what this is Loan Sifter, okay? And this is a program online that we license along with a bunch of other brokers. And what happens in here is we have just a ton of lenders, and of those lenders, let me back up just a second. We have a couple hundred lenders in here, and of those lenders, I work with about 47. And of those 47, for your particular situation or scenario, only about 16 of them are even close to being competitive. And when I talk about your scenario, Helen and Simon, I talk about these numbers right here. And really, your scenario is simply put as 5% down. 5% down on a jumbo loan is just a challenging thing to get done. Okay? And there's a couple combinations that go into making it a challenge. One is obviously the 5% down, and the other is this number right here. The 717 is a challenging number. 720 makes a little bit of a difference, and I'll show you what happens. Here's a 95% loan to value, so on an $850,000 purchase, 95% would be, or 5% down would leave you with 800. That would be the loan amount. And credit score, non-conforming, meaning that it's a jumbo. Okay, it's not an affordable product, which is Fannie Mae or Freddie Mac. It's not Fannie Mae or Freddie Mac. It's not any of these. It's jumbo, which is non-conforming. Single family, it doesn't matter if it's a condo you guys are looking at, a townhouse, the pricing will be the same. Owner occupied, yeah, you're going to live there. It's a purchase. You're going to have title and you're going to have your escrows, meaning that taxes and insurance will be a part of your payment. That's almost always mandated when you have 20% down. In fact, as far as I know, it always is. And the loan is full doc, meaning that you're going to provide any documentation for income that's required by the lender. The typical things, which would be 2 years tax returns and the W-2s to go along with those, 2 months bank statements, 30 days pay stubs, insurance declaration page for, you don't have one of those yet because this is a purchase. So yeah, just your income information, 2 years tax returns, and a couple paycheck stubs and a couple months bank statements, and if you have any retirement funds, and those statements too. So we need a whole financial picture. The better the financial picture is, the whole picture, the easier it is to get the loan through underwriting. Those are, people that don't, clients that have assets in the bank that they perhaps don't want to use for a down payment. that might be in a retirement account where there's a large penalty, 10% penalty for taking out before a certain age. So that, while that money is not available, it does serve as a compensating factor in the purchase of your loan. And a compensating factor, there's certain aspects of underwriting that are rather subjective, given the underwriter has certain latitude. So anything that we can provide that shows underlying strength in your ability to purchase and your willingness to make those payments will be considered a compensating factor should there be something else, such as the down payment, that doesn't add strength to the deal, so to speak. Anyway, before I go on too long, full doc, and the zip code doesn't really matter. You're in California someplace, so but let's say you're in Carlsbad, 92011 Carlsbad. That's that's the zip code that's pretty popular there. There's 92010. And so approved investors, let's go down here and see, I already ran this once, and this is the only lender that's coming up giving us an option of all the lenders that we work with. So it really makes me question if this lender even knows, if they Loan Depot, I wonder if this is incorrect, and maybe they don't do it either since nobody else is. But what you're seeing here is that Loan Depot will give you one 95% loan with a 717 credit score up to whatever you need to buy this $850,000 house, so up to $807,000. One loan, 95%. However, the rate is 6% or 5.875, essentially the same thing, right? And then you see this principal and interest payment down here, P&I, principal and interest, that's $47.78. Your payment on the Cal half-up program was $4900. So that's a better option, right? This one is, when you look over here, what this is, borrower points. And so borrower points, that's the rebate that you get from the lender towards your closing cost. So if the rate is 5.875, you as the borrower are going to get about $1,400, $1,429.28, and move up to 6%. Well, there's more money in the loan for the bank, and the bank shares that with you in the form of a rebate, $4,200, and so on and so forth. You notice this line over here, this is our column, this is our compensation. And we typically ask for 1.375% of any loan. What we get paid is the volume of loans that we send in one particular lender. We get 1.375%. Okay? And the reason why we try, I think, keep that modest is because the lower this is, the bigger this is, and our purpose here is to help our clients get into homes by keeping the cost of entry as little as possible. And what I see some of our contemporaries or competitors doing is this will be 2.375 over here, and this would be a charge to you. So we're not doing that. All right, so let's put this up here and show you what I mean with credit scores. Let's pop this up to a 720. Now the 720 credit score represents the lowest of 3 scores, right? There are 2 borrowers, so we'll take, of those 2 borrowers, we'll take your 3 scores and the lowest of the 3, or whoever has the lowest, that will be the one that we use, the lowest mid score of the 2 of you, more simply put. So anyway, what I did here was I raised that credit score to a 720, and then you see the doors start to open a little bit, right? This is 24 months. We don't need that, 24 months bank statements. Here we go. So then you're still, look at this lender here, Plaza, New Res, they want $15,000 in origination fee to do your loan. They clearly don't want to do the loan. And LD is still at $1,429, right? But the rate has come down from 5.875 to 5.5, while the rebate has remained the same. Okay? So let's change this to a, let's say we did a 90% first with a 5% second, and I'm just going to experiment a little bit here with you. I hope you don't mind. Not with you personally, but with the numbers. Sharing the information with you. So there we go. Let's see what these numbers come up to. I think I lowered the credit score to 717. Right, and we're doing a 90% first and getting a 5% second. So you see, nobody wants to see that loan. Nobody wants to see a 90% first, a 90% first, and then a 5% second. Nobody wants to do that. Let's go down here and put this in as a 85 and see if anybody will do that. And no, nobody wants to do that. So let me show you what people will want to do. They'll want to do this. This is what we'll start coming up with